Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So as we can see, we are back here at our support zone. This 41 to 42,000 dollar support zone. A few wicks deep into it at the moment, but looking to try and get supported here. Obviously, if we're at this lower level, we have got obviously every chance of breaking below, closing below, say 41,000, and then seeing an acceleration down into the $30,000 levels, as in the 30,000 area, not $30,000 itself. But you guys know what you mean. Basically down, you guys know what I mean. Basically down towards 38,000, potentially even 36,000. So yeah, potentially looking weak here. The plus side would be though if we can hold where we are now and move on onwards and upwards, and then obviously these lows will be higher than these lows here, and it wouldn't look as bad. But I think what we have got to contend with, once again, we shall go over to the stock markets. We can see the S&P is once again testing its very important level of support, very important level of support. This horizontal, then also this trend line. I mean, if we lose this level, well, at the very minimum, we are looking at down here, and it would start to look not ideal, basically. Sorry, I got some food stuck in my teeth. Not ideal for the overall upward trajectory that this has been enjoying for a while now. The main reason this is happening is, as we know, the 10-year yield here pushed onwards and upwards higher, inching towards that 2% level, which I believe is going to be a bit of a line in the sand. Where we get above here, it is gonna start to look pretty disastrous for all markets. Then we'll have to see some sort of yield curve control, some easing off of the Fed, yeah, and then otherwise we are in trouble. So we can draw a nice horizontal below here now, though. Nice horizontal here. So if we do get back below here, then yeah, we can look for a move down to obviously down to our support level down here, and potentially ease off with the stock market weakness that this is causing. What also I want to show you guys is oil. This is clearly not good for inflation if this is going to go on a mad one, and I actually think this is what is playing into obviously the issues with the bond yield, because this will directly play into inflation, and obviously then increase the potential need for more hawkishness from the Fed, of which we all realistically know can't do anything, but the market doesn't understand that at present. So the market is going to sell off, and bond yields are going to rally based on that. The dollar though, still below this resistance, so we could very easily, if we see more of this pain trade today in the 10-year, we could see this pull into this resistance. But we would like to hope that more of the 10-year yield pain trade towards 2% would start to basically make the Fed have to say or do something, in which case we could potentially whack the dollar and then ease this yield off, and then risk assets can go to the moon again in the true Ponzi fashion. That is basically what we're hoping for, and if that is to happen, then obviously Bitcoin will do well. If that isn't to happen, we do see the dollar break back above here. We do see 10-year continue. We do see stocks take out this horizontal important level. Then we are going to see Bitcoin break this support level and head towards the mid 30Ks. So yeah, all to play for. It is Tuesday. Could it be a turnaround Tuesday? It potentially could. It could very potentially could. This is a good level for a bounce as any. And yeah, I mean, the PPT, the plunge protection team, the working party federal open whatever thingy, They need to get hit in that. They need to basically just sit with their elbow on the buy button all today to try and turn this around, because yeah, otherwise we are looking particularly dicey here. Could be a rough week. Like I said, I think the oil market is causing a lot of problems here. Obviously that I think is what is feeding into the 10-year, into obviously inflation concerns, which then feed into the 10-year. Yeah, as of yet though, the dollar not particularly doing too much. Obviously a lot lower than these levels, because I think the dollar has to price in a certain element of the probability of yield curve control and some other extraordinary measures by the Fed. So yeah, it's going to be an interesting day. It is going to be an interesting day. It could all end up in tears, or it could all end up in the euphoric moves to the upside if the markets can turn this around. But like I said, this is the main problem, and I think like the newest driver of our main problem is this oil price now. So I mean, this is only going upwards thanks to all the eco people, the Gretas of the world, the people that just like to just I don't even want to get into it. The people that basically don't know what the FK they're talking about, yeah, causing all sorts of problems for the average person. But they don't care. They ain't the average people. They live a life of luxury and privilege. They don't care about the struggles of even the average people in the first world countries, let alone the average people that are starving and struggling in not first world countries. They just care about themselves and their virtue signaling and their little friendship groups and things like that. So yeah, there we go, guys. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research. Could be a very difficult day today. We've got to see how these stock markets, these bond markets, yeah, the stock markets and the bond markets react. I'd like to say how the oil market react. Oil prices are going higher, and that's basically as much as a given in all these markets that we look at the moment. I think is that oil is going higher until the Fed potentially drives us into a recession, and that is the only way oil prices are going to ease off. And even then, they ain't going to ease off enough to realistically help people out, but may ease off enough to obviously start to curb the inflation. So yeah, there we go, guys. Like I said, not financial advice. I'm not a financial advisor, but in my humble opinion, things are looking pretty dicey here. So we shall have to see how today, in particular, with it being the open of basically back off the holiday in the US, and then how market digests basically just the situation going into the rest of this week. So yeah, I'll speak to you guys soon.